Alright, let's look at a couple of short examples on how to solve FIFO, LIFO, and weighted average problems. I have a really basic scenario here. It says Kira Sports uses FIFO inventory method. Kira Sports started December with 9 helmets that cost $56 each. On December 19th, Kira Sports bought 16 helmets at $51 each, and on the 28th she sold 11 helmets. So the beginning of this problem is going to be the same for either method that we're using. So we always use this type of record here to keep track, and it's very important that we fill this in as we go along. So we'll go ahead and record the date here, which happens to be December 1st, and then we didn't have any purchases. What we actually had on hand was this inventory, 9 units, $56 each. So that particular, those helmets cost $504. Now then it says that we bought 16 helmets on the 19th at $51 each. So what we're going to have to do is continue to fill in our graph here. So now on the 19th we purchased 16 units at $51. That's a total of $861. And here's the part that students typically don't like to do. What we need to do is kind of assume, and I wish there was a line here, and we're going to carry down this information from the first. So we have 9 at 56, that's 504, and now we have 16 at 51 for $816. Why this is important is because now we can say, on the 19th, this is what I have in inventory. So when I go to sell, which is the next step, 11 units, I know exactly what I have in inventory. I know what was purchased first, and I know what was purchased last. That's going to help us. You'll find out as you do some of these more complex problems, you'll get a column hangers up here. You'll get ones that get left, and if you're not carrying that down, you're going to forget about them. So it's always important to take the extra step to show on each and every date what exactly it is that you have in inventory. Okay, so let's go ahead and we'll go ahead and sell those 11 units. Now remember, this happens to be a FIFO problem, so first in, first out. We have to figure out which of those units were the first ones in. Well, obviously this 9 at 56 were the first ones in, so they're going to end up being the first ones to go out the door. And let's go ahead and kind of write that in. So we've got all 9 of these are going to get sold first. They're the first ones in, they're going to be the first ones out. So if I had 11, or I sold 11, and I had 9 there, that means I need 2 more out of this group of 16 that I'm going to sell. Well, those ones at 16 cost 51, so I will also sell 2 at 51. Add those together, that means my cost of goods sold, I sold 11, and the total cost of those was $606. Question then becomes, what do I have left in my ending inventory? Well, if I had 9 and 16 and I sold 11 of those, that's going to leave me 14 at a cost of 51 for $714. So here's something that you have to be aware of. So this is my cost of goods sold for the month. If we had more, we would add all those up. This is my ending inventory. So a lot of times the questions will ask you, what was your ending inventory, or what was your cost of goods sold? So you have to pay attention very carefully so you make sure you answer that correctly. All right, let's go ahead and move on to a LIFO problem. Oops. This is the same problem, only this time we're going to use LIFO. So it starts exactly the same as we had under FIFO because we have purchases. Where the difference is going to come in is under the when we actually go to sell. So hopefully all that looks exactly the same for you. Now this time this is a LIFO problem, and LIFO stands for last in, first out. So this time the last ones in are going to be the first ones out. So when we go to sell 11, and remember last time kind of drew a line here for you, and what we had in inventory on the 19th was what's highlighted in yellow there. So the last ones that came in are going to be from this group on the 16th. So those are going to be the first ones that need to go out the door. So that means if we sold 11, we need to sell 11 of those. They cost 51. So those are going to come right directly from that pool. That means my cost of goods sold is going to be $561. And what am I left with in inventory? Well, I got rid of 11 of those, so I still have 9 at 56. Now I only have 5 at 51. 9 and 5 is going to be 14, and if we do the math across, that leaves me with ending inventory of $759. Alright, the last one, weighted average, again starts the same. The difference is every time now that I make a purchase, I have to recalculate the weighted average cost for all those items. So let's write that down. So when we only when we make a purchase, only when purchases are made, do we recalculate the average. Okay, so make note of that. So now on we still have our beginning balance. We're going to buy 16 more helmets. Okay, so now you can see what happened. We had 9 at 56, and we went ahead and we bought 16 more at 51. So that was 800. Let's calculate that average. Not sure if it's going to show up here for us. No. Okay. So let's go ahead and calculate that average. So if we add those two together, oops, sorry. Let's erase that. Okay. So what we want to do is we want to take this 504 plus 816. We want to take our total goods available for sale, which is what was in inventory plus my new purchases, and that gives me $1,320, which you see here, $1,320. Then we need to divide it by the total number of units. So 9 plus 16 is 25. So if we do that, the total cost of goods available for sale divided by the number of units available for sale, that's going to give us our new weighted average. So that looks like $52.80. So that's where that number came from. So now when I go to sell, I'm going to sell all of them at $52.80. And again, we'll start clear there. So here's what we have then in inventory. 25 units at an average cost of $52.80. So when I sell 11, I'm going to sell them at $52.80. 11 times $52.80 equals $581. And if I had 25 and I sold 11, that's going to leave me 14. 14 times $52.80 gives me $739. So here is my cost of goods sold. And here is my ending inventory. One last comment here that I need to stress very strongly is students struggle with imagining how the inventory actually flows on the floor versus accounting inventory. So remember, those are two not related items. We can use FIFO on the floor and use LIFO for our books. They don't need to be the same. So just understand that basic concept there. How we handle our inventory in our accounting or for our books doesn't necessarily correlate with how we actually handle the flow of inventory on the floor.